What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 26th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to cut straight to the chase and talk about Ethereum, the second largest cryptocurrency on the market. And not only because many of you out there probably have some exposure to Ethereum, but also because a lot of people are curious about the current status of Ethereum, whether or not it looks like we're expecting more upside here in the future as we gain more optimism, for optimism, the layer 2 scaling solution for Ethereum and ETH 2.0, or are we expecting more bearishness as the price action might begin to start lagging? So we've got a lot of things to discuss through this video, and outside of that as well, we've got a sponsored interview with Austin Woodward from TaxBit, where we're going to be talking about the TaxBit software and much, much more. So I recommend you guys stay tuned for that, but let's go ahead and dive into the discussion at hand. Let's not waste any time. A lot of people have been very cautious about Ethereum for a couple of reasons, and it mainly has to do with price performance here. Now, if we take a look at the US dollar chart here, guys, I gotta agree with some people. The price action does look a little bit shaky, at least not as vertical and confident as it was before. The momentum has certainly stalled here over the last month and a half here, since back here in early February. And outside of that as well, we've set in a pair of lower highs, and we're really treading on thin ice here to see whether or not Ethereum will be able to hold at this general line or range of support. We have still been setting at higher lows here, so it's not technically bearish, and we haven't gotten a confirmed reversal here. A confirmed reversal usually comes in when you have a set of lower highs and lower lows, right? Now, we can be pretty rest assured here, just to kind of cut to the chase here, guys. If we do break below this line of support, back down the previous low or relative low that we set here on March 24th, if we break down below the range where the wicks went or the tail end of the candle here, so somewhere around below $15,000 per Ethereum, that could be a really big warning sign or an early warning sign before we really get our lower significant low here against where we set back here at $1,300 in February of 2021, right? Late February here. The important thing to keep in mind here, though, guys, is everyone's been panicking. I got to say that the sell side fear here has actually been much greater, ironically enough, here than what I sensed back here in February. Because I think a lot of people could resonate much more about the euphoric rise, and I've seen this in all kinds of markets. They really tend to take more perspective as they're looking at the shorter term time frames. It's like, oh, but we've gone up so much, right? And the dip here is still way higher than the previous ones. And people start to get more and more impatient. They're looking at the shorter term time frames. And that's the biggest problem that I find here, guys, is that people get way too concerned about any kind of discount or pullback in the market here. And they don't look at it as a buying opportunity. They rather see it as a point of weakness. But let's just go ahead and take a step back here and do some proper price analysis. Is this anything to worry about? Well, if you want to just take a look at the US dollar chart here, I got to tell you guys, this is pretty common bull market price action, and there are some substantial pullbacks along the way that you're going to have. And what I'll do here, just to provide some more context, is I'll pull up a longer term chart of Ethereum into its US dollar chart. So what I'll do is I'm going to pull up the I think Bitfinex is going to give us a much longer price track record here. So we can see here that there are many periods of time during the bull market where we had substantial discounts. Let's go ahead and analyze it live here on the chart. We'll grab our date and price range tools, take it from the top to the bottom. We had a 68% pullback or more right here during the middle of the cycle. Right here, we had another pullback, 48%. How about over here, right? In a couple of days, Ethereum went from $865 down 43% to a matter of around a little bit under $500 per coin in this case, right? So lots of corrections on the way up, and that's not even including what we've probably got back here in the past, right? So just some of the examples here, and they also look very dramatic if you're looking at the linear chart in this case rather than the logarithmic, right? The standard chart here that most people are looking at. It's going to be exaggerated when you're testing towards new price ranges, right? Even though this correction is as bad as it was, as bad as it seems, it really only cut down to back where you were back in May of 2017. Pretty much cutting out 2 months worth of price gains and then leapfrogging even higher, right? So that's the important dollar-based perspective. Let's take a look at it compared to Bitcoin. Well, what is Ethereum doing? On the longer-term track record, since as far back as September of 2019, since we flipped on altcoins, it's been setting higher highs and higher lows. And it's doing something that it's practically done for the last 3 higher lows, which is that it retests the level twice. So I'll take you to the daily so you guys can see it a little bit clearer here. We'll look at it one time, each of these lows one at a time. You've got a double bottom here, a retest of that range of support against Bitcoin. You got a double bottom here, a little bit wider time frame, but again, a retest to the same price range, bounce up, continuation of the cycle. Let's take a look here. Exact same thing back here in December of 2020. Retest, major breakout once we saw it as people started to pick up on the consistency of the pattern. And now we're right back down to that support range. Now, could it break down? Yeah, it could. But technical analysis favors here that Ethereum is going to get a rebound here at this price range. The exact moment where everyone feels like selling their Ethereum, either back to Bitcoin or cashing out, is probably one of the more opportune times to look at averaging in and buying. Now, I'm not telling you guys to do anything. I'm just saying here that so many people tend to have that mentality, and I can't emphasize it enough. Whether some of you have been here for a long time, some are just getting started in the market, I see it in so many people out there, and I can feel it as well. I've resonated with that feeling before, but I can tell you guys to speak with my actions rather than just my words. I haven't been making any buys or sells in this case. I'm looking to definitely add into the market here sometime soon if I get some additional fiat or dollars. But honestly, I haven't been changing my positions. I haven't been really selling anything. So again, I'm very confident here on the current status of the market. And what we've been generally seeing with these higher lows and higher highs is an increase in growth and momentum against Bitcoin. And that's the chart you guys want to be watching here, is how Ethereum is going to play out going into the next year, or really just over the next few months as well, right? And again, this isn't an exact model for how Ethereum is going to perform against Bitcoin. We've seen sometimes it goes very parabolic, but I think that this is a much more healthy projection, and it probably won't play out like it has exactly in the past. Next up here is altcoin dominance. You know, a lot of people are fearful of the altcoin market right now with Ethereum performing the way it is, but altcoin dominance is riding towards its highest level here, pretty much towards the relative highs it set in February, or its highest point since back here in November 2020. It's holding up well. It's setting higher lows, and it's continuously testing up the higher range here. You can almost say what's happening here is we've got an ascending triangle for market dominance for altcoins that's set to break out sometime here in early to mid-April. That would play into our goal of an altcoin cycle kicking off in April and going into the month of May and possibly early June if we get it a little bit later. Take a look here at total market cap excluding Bitcoin, right? So this is including your Ethereum and also as well any other type of layer one protocol, any other altcoin down to the small cap gems that everyone keeps talking about that, you know, they're going to pick it, it's going to do a 10, 100x, right? Well, take a look here at our general projection here, right? We have an estimate here that we're going to be riding towards an altcoin market cap of around $5 trillion, right? Some people have slightly higher or lower numbers. It's a decent conservative model here. In the last cycle, we rode from around $35 million in altcoin market cap to $500 billion, a massive percentage gain. We are asking this time around to do a fraction of that kind of percentage gain. In fact, if you look at this here, what we've got here is a 1,304,195% return versus the 13,500% return we're expecting from bottom to top. And we've gone about halfway through that, right? We've already gone through, as we can drag it down here, about a 1,500% or more move in overall valuations for altcoins. And now we've got another halfway of the journey to go, right? And to be fair, we're only at 642 billion, whereas we're expecting we're going to 5 trillion. So let's just take a step back there on a fundamentals basis. Do we think that Ethereum, as we go here to the chart, see where we're at right now, do we think that ETH is going to top out here, even though we have barely gone through 1/10 of the valuation range we're expecting for this cycle? Probably not, right? And that's my whole point here and why I always emphasize here that, again, a 5-digit ETH, and I'm talking $10,000 or more in this cycle, is a possibility. It is a possibility at the end of the day. Who knows if it's going to go up that high, and who knows if it's going to get there overnight. I don't think it's going to get there overnight, and I like to keep my estimations conservative. That all being said, I know that there's going to be probably another couple $1,000s of price action per ETH token, or ETH coin in this case, before we have a market top. And if you guys are here for that long run, if you've got another market that's going to perform like that, that's going to perform a 2, 3, 4, 5x in price, let me know, because I want to get into it. I don't know any other market out there that's going to do that. And when you're talking about allocating capital here, especially in a world where there's so much mass depreciation of currency, and there's just abundance of capital in the market, it's not hard to understand why Ethereum's at $1,600 and why there could be potential outlook for the future for it to go even higher, right? Again, what we've seen is materialization of the macro environment we're currently living in. And let's just go ahead and take a look at the fundamentals here, right? Now, I'll be honest, this is a couple days behind here, about a week behind in data here. But this is from Crypto Quant here. It's on-chain verifiable information of ETH reserves by exchanges. So the amount of Ethereum held by exchanges in the crypto space. Right? From the analytics we've gone from around 25.5 million, 26 million, again, a little bit under 26 million here in Ethereum on reserves for exchanges, down to 20 million. And that trend is very, very clear here, guys. So what's really happening here? If the amount of reserves is going down here for Ethereum, why isn't price absolutely soaring? We've reduced about 2 million in reserves just over the last couple of months since January. Shouldn't price be going up vertical if supply is draining up? Well, if demand drains up, that can also keep price stagnant here. And that's why we're going sideways, why we're not seeing a dramatic set of sell side pressure in price. Really, to be fair, guys, I know it can be really scary if you're looking at the daily or the hourly, but we've been going sideways since February. This isn't really per se bearish price action. Heck, it's not even, if you want to be completely candid and honest about it, it's rarely, just barely here, about a 20% correction, right? So we're not talking about the typical 40, 50, 60% corrections, 80% corrections that you get in a bear market. These are more of the sideways corrections that you get in the middle of a bull market, the waves that make up the broader cycle. There's got to be dips and opportunities where other investors who have been sitting on the sidelines and who are skeptical get in. And going back to that point there about the supply and demand dynamics here, supply is still draining. ETH 2.0 is taking a ton of Ethereum up. You've got a ton of people buying ETH as not only, there's a few companies holding it as a reserve asset. I think more than anything, hedge funds, investors are broadly getting exposure to. I'm not going to try to oversell it. There is a lot of demand though on that front, right? And the supply itself here on exchanges is depleting bigly because of that reason. But in the sense of the broader demand here, retail traders who trade mainly on spot exchanges aren't buying Ethereum at the rate they were back here in January, right? Same with institutions. We can just see it on the spot volume here. So what I think we're waiting for is for that technical breakout that we talked about. We're waiting for these lower highs and higher lows to come towards a correlated point here, similar to altcoin dominance like we talked about earlier, a wedge here where price is eventually going to break past these two lower highs and set in a new all-time high, right? That's what we're looking for here. That's what we want to see in price. And so long as we hold this general line of support here and we're not setting in lower lows, history and all the market information that we have, whether it be fundamental supply and demand metrics or price action through technical analysis, is signaling no reason for me to be extensively bearish on Ethereum. And I'll be fair and candid in saying that I feel the exact same for the Polkadots of the world, the Cardanos of the world, Binance Smart Chain, or BNB in this case, any kind of tokens in this case, in the DeFi ecosystem, enterprise blockchain, oracles, you name it. I really don't see any reason to be bearish here. Sure, things are a bit boring right now. They're not going vertical, but I can tell you guys, with any great market that's pretty much going vertical most of the time during a bull market, it's going to have periods where it's having a cool down, things aren't going up absolutely crazy, and there's no reason to panic about it. The only thing you should be panicking about in this case, if you really do have that longer term time frame of it going up farther beyond any other market in the sense of percentage returns, is when can you get your next fiat allocation to buy more? All right. Again, it's not financial advice, guys. That's my mentality. I'm just sharing what my thoughts are and what's been able to help me kind of succeed in navigating crypto, but also equity markets, commodities, Forex, etc. When you have a good position at play, you don't try to change things up. You don't try to chase the next high or the next altcoin or the next speculative market. When you've got a clear game plan, it's going to give you a good risk-adjusted return, right? Anyways, guys, I'm rambling on enough here, but I want to go ahead and talk about another thing that I think is really important to keep in mind, and that is preparing for tax season here, guys. Luckily, if you're in the States, there's been an extension on filing personal taxes, which is awesome. And I know some other regions are probably going to do the same. But no matter where you are, it is very likely that you have obligation to pay tax on crypto. So we've got a great interview here with Austin Woodward from TaxBit here today, and I think you guys are really going to like it. We cover a lot of good areas, so stay tuned. You won't want one. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with a longtime friend in the cryptocurrency space, and that is no other than Austin Woodward, who's one of the co-founders over at TaxBit. I've been following Austin's story since as far back as 2018, as we originally had him as a partner here on the channel. And I got to say, you guys have been doing phenomenal things. Just closed a $100 million raise in your guys' end. So it's not just a matter of getting to chat with you, Austin, to talk about taxes, man. But outside of that, you guys have really made a legendary story for yourselves in the crypto space. So I just want to say, getting to know you all these years, man, I know I say it to you personally and also here on the camera, man, I'm really proud of what you guys have been able to achieve. So thank you for making the time, man. I know you keep busy, and really excited to talk about some tax related topics today.
Yeah, likewise, Nick. This is exciting for me because this is our third tax season in a row doing our annual catch up and tax interview. So one of TaxBit's longest partners. And like I told you 3 years ago, your channel was what ultimately educated me on crypto back in 2017. So this is cool.
Crypto tends to go full circle, man. That's awesome. But I really appreciate you making the time, Austin, because I know you guys do keep busy. But I wanted to kind of preface the conversation with saying that there was a few things I wanted to talk about today, because you really are at the forefront. You're working with a lot of the major authorities in the space here when it comes to taxes. You guys are delivering on some of the best industry grade software for managing cryptocurrency taxes as you guys have been ramping up your operations. I want to hear a little bit first in this case, Austin, about generally, what are the major things that people need to be concerned about when it comes to taxes? So there's a lot of activities in the space. There's trading, there's earning interest, kind of diving into those different tax obligations. Then also diving into a little bit of how TaxBit can kind of supplement those requirements in order to report taxes. And then also maybe talk big picture, talk about geography, some of the major changing regulations coming in this space, as you've been really at the forefront of things as we continue to keep in contact over the years. So let's dive into that first point there, about what kind of tax obligations could people have to pay for, in this case, for crypto related activities?
Absolutely. Let's dive right in. So I'm going to first put out my disclaimer. I know we're going to get 100 comments that say taxation is theft. Why are you having TaxBit on the show? That's fine. I love all of you. I just want to put it out there right now. I do not work for the IRS. I'm not a governmental entity. We're a private business. And the reason we exist is because cryptocurrency is an amazing asset. I too am a huge believer, a huge investor, a huge user. And I founded TaxBit 3 years ago because I realized that cryptocurrency isn't currency in the eyes of the IRS in most countries across the globe. It's what's called property. And that's a different type of asset that requires cost basis tracking and tax and accounting treatment at almost every touch point. And so immediately, being a CPA myself, a light bulb went off and said, oh my goodness, if we are going to see cryptocurrency go to the masses, enable mainstream adoption, there has to be a tax and accounting software at the heart of it all that's going to comply with what undoubtedly is going to be forthcoming on the government regulation side, on taxes, country by country. And so that's why we exist. We exist in order to keep cryptocurrency intact. Without TaxBit, there is a really good chance that regulators just say, hey, tax evasion and money laundering are two things that are just not going to happen in the walls of any country. And so fortunately for us, having been in the industry 3 years now, regulators are really supportive, actually, and they're seeing the benefits of this asset class. The first thing right away is being able to cross-borderly remit payments and transfer funds. It's incredible. I miss payroll all the time at my old company because we couldn't move funds from one country to another without it taking 3 days to clear in the 21st century. I'm like, wow, cryptocurrency can solve that. Talk about impoverished countries dealing with inflation and cryptocurrency being able to solve that. That's a huge problem. Eliminating the middleman on transaction fees and being able to move something from point A to point B without an intermediary and being able to solve that problem. Being able to tokenize real asset classes such as real estate, make those liquid and accessible to everyday people, not just accredited high net worth individuals. And so as you can, I hope you can see my passion for the asset class in general. It's just, I am a believer that we do need to comply with what the authorities, set as the standards. And in this case, cryptocurrencies, property, and taxes is a standard and a requirement across the globe. And so going into your question, what does that mean? So I think one of the biggest misconceptions is that cryptocurrency is only taxable when you cash back out to fiat currency, whether that be a dollar, a euro, or whatever your local currency is. And unfortunately, that's not the case. There's a lot of taxable touch points along your cryptocurrency journey. You can purchase it and you can move Bitcoin to Ethereum. That's a taxable event. That's what's called a property for property trade. Now you've got a rampant increase in staking and lending protocols, which are amazing. And I hope everyone eventually signs up for a Digifox account and checks out what they're doing. I'm a big fan of Nicholas's company there, and we'll talk more in later on in the year about that. But you can earn money on your crypto. Well, that's amazing, but there's taxable touch points in that. There's forks and there's airdrops where there's tax touch points on all of those events. If you go and use cryptocurrency off of a debit card to go buy your cup of coffee, that's a taxable event. You've got point of sale merchant systems coming out. PayPal's been vocal, going to allow you to spend crypto with 30 million merchants later this year. And that's a taxable event. And so all of these things, I know you hear the word taxable event and it puts this big caution sign in one's mind. But that's exactly why TaxBit exists, is that you can go about using crypto in your day-to-day lives how you wish, and you can have full visibility before you even make trades as to what the tax impact of those are going to be. And taxable event doesn't necessarily mean tax liability. It can mean tax asset or tax refund. We help you optimize, and we'll get into that later in the show. But that's who TaxBit is, and then that's what we do, is we automate your entire cryptocurrency journey by integrating with all of your exchanges, your wallets, now even DeFi protocols and beta and the like, to be able to track all of your cryptocurrencies movements and capture the tax consequences or events along that way.
Yeah.
Yeah, go ahead.
I wanted to hit on a few things. I mean, you covered a lot of area, man. I think that first off, the narrative you presented is very real and it's very fair and non-biased, because I have to say personally, I came to that same conclusion when it came to seeing how regulators treated cryptocurrency markets. As much as there have been some stifles and innovations of getting a Bitcoin ETF or some things of that sort out the line, really when it comes to ICOs and tax policies, it seems like regulators have actually been quite open to it, and they've allowed this ecosystem to kind of flourish and exist in its own way. But at the same time, when you're doing anything, exchanging to fiat or exchanging from one currency to another, where you're capitalizing on gains from one position to the next, of course, that's going to be treated like any kind of trade. If I were to trade from any stock or buy a property and make a return, right? And in that case, there is capital gains, and there are also other income generating opportunities in crypto that need to be recorded, right? Just like any other kind of market. And that's the conclusion I came to. But the second one as well here that you kind of hit on is really two of the major activities that are taxable events here and are probably the most real for people when it comes to reporting. And that's the realized gains on capital gains. So if you buy one position and sell to another, whether that's back to fiat or another altcoin or crypto. And then outside of that as well, income from interest income, right? So for example, platforms like Celsius or staking platforms, right? So I'm curious to kind of talk about that in that case. What does it look like, and maybe a bit more detail, or maybe there's some additional things that people should know about when reporting those events. And I know that you hit on one thing, which is also tax optimization, which you guys are big about at TaxBit, which is actually in favor of the user here who has to pay taxes.
Yeah, totally. And so, yeah, I think you've got the compliance aspect that sits on one side, which is a necessary evil. And then you've got the tax optimization, wealth management aspect, which is quickly where we went to after dialing in on the compliance side, because you said it exactly right. This is not all dissimilar to that of equity trading. It's very, very close on kind of the analogies between those two asset classes. And so, as you mentioned, if you go and buy one Bitcoin, let's just say you buy Bitcoin at $40,000, that's a good price today. And then you went and traded for all of that one Bitcoin for Ethereum. And let's just say it resulted in 20 Ethereum. And so that 20 Ethereum becomes your proceeds, and your cost basis was $40,000. So whatever the value of that Ethereum was, let's call it $50,000 when you made the trade, that will become your proceeds. So 50,000 less your cost basis of 40,000 is a $10,000 gain that you report on what's called an IRS 8949 that lists out all of your gains and losses. Well, TaxBit does just that for you. And so it will connect with your exchanges and wallets and see, okay, you bought Bitcoin on this date. This is your cost basis. You traded it for Ethereum. That was a taxable event. We're going to go and do all the math for you and provide you with an immutable ledger that shows you all of the math behind that. And then your tax forms, the 8949 that I had just referenced, that integrates right into TurboTax and other tax softwares are over to your accountant at a couple clicks. So yeah, we absolutely handle the capital gain and loss component, which I'm going to come back to because that presents a huge tax optimization strategy, which every savvy investor should be taking advantage of, not just in cryptocurrency, but in commodities and equities as well. But let's go into the second use case that you said, which is the income side of things. Lending, staking, even mining income falls into this category. So once you receive crypto in return for lending or staking your assets, each receipt that you receive is what's called income. And income is the same thing that you report on a W-2 from your employer that you receive, or a 1099 if you're an independent contractor. It is taxed at, whatever your marginal tax bracket is here in the United States. And so capital gains and losses have a little bit more tax beneficial treatment because you've got this concept of holding period. If you held it for over a year, you can get preferential tax rates as low as 0%, depending on your income level, up to 20% maximum. Income is taxed at a little bit higher rate. It can vary from 10% to, well, what is it these days? 40% at the top income levels. And so what TaxBit does is it's going to keep track of all of your income deposits. So if you're using a BlockFi or a Celsius, we know, okay, these are interest deposits or income from staking or lending your coins. And we're going to go and look up the fair value as of the timestamp that it hits your wallet. And we're going to keep a ledger of your income receipts and be able to sum that up and produce you an income report, which then you can use to report on the income section of your tax return. Well, that income on each of those receipts, that then sets your cost basis in those assets. So if you receive, let's just call it, 0.01 Bitcoin at $400 as one of your interest receipts, that $400 sets your cost basis. And then if you go and subsequently sell that Bitcoin for $300 at 0.01, you have a $400 cost basis less $300 proceeds. So you have a $100 tax loss that you can use to offset, some of your income and your other capital gains and losses. And so there are two taxable events once you receive those income events. It's one, reporting the income, but second, it's the capital gain or loss from subsequently moving those assets thereafter. Does that make sense, Nicholas? What questions came to mind? Just as
no, that's actually perfect, Austin. Because I just have it. One thing is when I talk to people about crypto taxes, the biggest thing they kind of get overwhelmed by is it's like, okay, starting off on Square and like what kind of events are taxable? And you brought up a good point, which is that, to be honest, guys, without some kind of software tool when it comes to crypto, the problem here is that unless you are an accountant, like a trained accountant in this case, or you're a bookkeeper and you're very great at recording every single type of trade that you might make, every type of spending activity, if you're really someone who's active in the crypto space, using cryptocurrency debit cards, interest earning projects, right? All these types of different methods you can interact with crypto are taxable events. The good news is there's some events that don't realize gains or don't realize income. If you're sending a payment to someone, that's not if you're sending it between one wallet to another, that's not a taxable event. Now, if you are sending it as a payment to someone for something or a gift, if you're a receiver in that case, there is a taxable event. So again, there's a lot of different things that have to be kept in mind there. One thing I'm curious to ask you about though, Austin, I know we've covered some great things. There's the tax optimization tool. You guys have this ability to plug in all of your exchanges and providers and wallets, plugging into the APIs of a lot of systems so you can get a clear kind of automated record of everything that you can go back and check and modify certain transactions to see if they're certain types of events and labeling them properly. So you can make sure you have everything all in one spot. But now that we've kind of got this concept of what TaxBit offers and everything, I'm really curious to just kind of ask you, like, generally, what are you seeing so far in the tax landscape here, whether it be the IRS? I know you guys are aiming to go global. So how are things progressing? And they look like they're getting better in this case overall and a little bit more clear?
They are in that it's important to keep in mind that regulatory agencies, not just the IRS, but also abroad, they typically live in a world that's 2 years behind us. So they do their audits on a 2-year lag, meaning right now, as we sit in 2021, they're in the 2019 tax year, okay? And so cryptocurrency was still in a bear market in 2019, and it really started to come out of it over the last 6 to 9 months. And so just because you don't get an audit notice letter within 6 months of filing your tax return doesn't mean that you're all fine and dandy and in the clear. It will take 2 years. And so as we look at tax year 2020, as we had a spike at the end of the year, 2020 will be a focal point tax year for authorities. And so when you look at what regulatory agencies are doing, they're investing a lot right now in this asset class. And in my mind, that's a good sign. That's a sign that in their thinking, cryptocurrency is not a fad. And 2 years ago, if you were to ask them, it could have been just that. This is an asset class that's going to be around for a long time. So we're going to invest in it. We're going to, answer questions, set the clarifying guidance that we need to in order to scale this asset class from a tax perspective. And so that's what's happening. The pros being that, yeah, if you have questions and other things, there are going to be clear answers. Which we're at the forefront of. We're very close to the regulatory agencies around the world, and we'll always update our software very first accordingly. But also second, the negatives, I should say, are gone are the days of cryptocurrency being anonymous and you thinking you can, totally get away and stay under the radar. There is what's called 1099 reporting and information reporting in the United States, as well as around the globe. They have different names for it. And so exchanges are reporting transaction activities, and you're going to see just a huge influx in what the exchanges need to report to the IRS representing your trading activity. And so just keep that in mind. I think the best thing to do is don't try to evade taxes. That's illegal. That can be criminal. But try to optimize taxes. Try to legally play within the parameters, because there are a lot of ways that you can get money back 100% legally, and TaxBit can help with that. So the first thing you're going to see on your tax return, if you haven't done your taxes yet, tax season was just extended to May 15th. They moved the question of, do you own virtual currency during the year? I'm paraphrasing here, right under where you report your social security number and your personal information. So it is on the front and center page. That's just showing you right away how the IRS is viewing cryptocurrency. This is an asset that most Americans are going to own in the next coming years. And so we're going to just put it front and center and just let everyone know, hey, if you check yes to this, we're expecting something to be filed with your tax return. And that something is what's called an 8949 tax form, which is what TaxBit will furnish for you.
I gotta say, Austin, the last person I would have expect to do a massive marketing and awareness campaign for crypto would be the IRS. But that's awesome to hear. I mean, to be fair, that's very smart, I think, overall, again, just to make sure people know to really see that box and check it off if possible. Because to be fair, I mean, it's so fast growing. And I have to say, again, this is, again, I think a thing with regulators here is that they're starting to, I think a bit more ahead of time and stuff overall with these emerging technologies. Because as you said, it takes years to be able to manage and manage the backlog here with all these different types of transactions and participants. But overall, it's good to hear overall that they're aware of it, that they're trying to make it more simple. And also with a lot of tools like TaxBit now out there in the market, it's not as cumbersome as going through each manual trade in this case, or building an Excel spreadsheet, importing all your CSV files. Now you've got an actual app that has a clean user interface. It makes the whole process simple.
That's right. And that's how TaxBit started. I'm a CPA. I thought I could build anything in Excel until I worked on my own cryptocurrency taxes, and it was hell. And so that was exactly why we came into existence, is we've got to automate this and take it off of the shoulders of everyday users like you and I.
Awesome, man. Well, Austin, this has been such a really cool conversation. I think overall, I just want to emphasize to all of you guys who might be interested, and learning more about TaxBit as a platform, or maybe learning more about Austin and Justin's story in this case, what they've been able to build here over the last few years, you guys can check the link down below. You get a 10% discount on signing up to any of the TaxBit plans that they offer. But there's different packages here that will support different needs. If you're on the smaller end in this case, you maybe got 1 or 2 exchanges, 3 exchanges, maybe where you're doing some frequent day trading or have some interest earning activity in Celsius, you can use one of the lower tier plans. But if you really have a lot of capital and a lot of activities where you want to make sure you get things right, there are some of the larger packages like the Pro Plus package that will give you a ton of different resources like, CPA accounting assistance in this case, and also a variety of other tools and stuff that might come in handy. So Austin, I have to say, man, again, thank you for making the time. Is there any last things that you want to share? I know one of the big things here that's really important is to know that you guys can actually plug in all of your data into TaxBit if you like before you actually sign up. So you can plug in your exchange APIs, et cetera.
That's exactly what I want to emphasize. There's a 14-day risk-free trial. So go just sign up, check it out. And I want you to click on that tax optimizer tab as soon as you link up your data, because you can see right away if assets are in loss positions, you should be harvesting those. Sell them, repurchase your position back in the asset. And now you just increased your tax refund and offset a bunch of income. So learn more. We've got lots of blogs. We've got tax attorneys, CPAs on staff. Another thing I just want to emphasize is our support team's incredible. Even our basic plan, as low as with the 10% discount for Data Dash subscribers, $45 a year, you're going to make way more than that using our tax optimizer and other things. But our support team's available, live chats, all hours, typically during this time of year. And so reach out to them. We're here to, be a resource for you. We don't just want to give you software, but we want to help educate you. We want to have human interaction with you, learn about you, and our support team's incredible, and you're going to find that.
Awesome, Austin. Well, thank you so much, man, for making the time again from one founder to another, man, and one friend to another. Congrats, man, on all the success you guys have had. And best of luck in everything this year during the tax season. Again, if you guys need any other additional resources, don't hesitate to reach out to the customer support team there. Really respect Austin and the team for maintaining that. I think so little crypto startups do that. So it's really refreshing to have that kind of human element, especially on probably the most confusing and kind of difficult to confront topics within any area of finance. So Austin, you guys have done a phenomenal job. Thanks for making the time, man.
Great to be here. Thanks.